Since the devastating meltdown in world financial markets in 2008, investors have been looking for alternative ways to protect and grow their wealth. Specifically, they've been seeking out assets that don't necessarily move alongside traditional investments like stocks, bonds and commodities. One of the alternative assets investors have been turning to is rare stamps. This may seem odd, as most people think of stamps as being a collector's hobby rather than an investment. However, more and more investors are waking up to the reality of stamps as a tangible asset which they can use to boost their returns and lay off risk. So what are the actual benefits and drawbacks of investing in rare stamps? To find out, I've come here to Stanley Gibbons, a firm with more than 150 years of heritage in the stamp business. Keith, are rare stamps really a kind of investment?
Absolutely. There's this sense of them being a collectible, a hobby, very much part of the older generation and increasingly irrelevant in the digital age. It's like vintage cars or fine wine. You've got to pick the right chateau from the right producer, from the right vintage to really get value and something that is desired and appreciates over time. But when it comes to investment grade stamps, we're talking about investing in history. We're investing in a communication revolution launched by Queen Victoria in May 1840, and that's the difference.
The main stamp price indices have shown impressive growth over the long term, but that can only really come with risks attached.
Stamp investing is no magic bullet. It's not guaranteed in any way, and for some people it's not right. There's no yield, there's no dividend, there's no income. It's very much about buy and hold for the longer term.
What are the risks of stamp investing?
Stamps are uncorrelated with other mainstream asset classes. And we saw this very, very strongly in 2008, 2009, when the majority of other asset classes went southwards, but actually our stamp indices grew by more than 30%.
If I buy a share or a bond, the stockbroker I buy it through is heavily regulated and overseen by a watchdog. That's not the case with Stanley Gibbons, though, is it?
We're not regulated by the Financial Conduct Authority or anything like that. However, in 1914, we were awarded the Royal Warrant for services to philately. What that actually means is you have to trade with the royal household on an annual basis and maintain a level of integrity, quality and authenticity that they deem worthy of reissuing the Royal Warrant. We are stock pickers in the sense that we select rare stamps for our investors and our collectors.
At the end of the day, though, it is Stanley Gibbons that's setting the prices for these stamps.
That doesn't happen. Stamp prices are ultimately set by the market, and they are arbitrated by our group of expert philatelists who take a year-long view of global auctions, market trading, and who and what is affecting the market before setting the price. And then that goes into our catalogue value.
Stamp prices do go up and down like anything else, and I have even read stories about them slumping on occasion.
No, that's true. But here is where we need to differentiate the collectible market and the investment market. Very often the stories are driven because people are interviewing collectors who buy stamps for a fundamentally different reason. They are building a collection over time about emotional value, not so much about financial value. When it comes to investing, we're talking about supply-demand economics. You can't print any more penny blacks. You've got rare assets sought after by an increasing base of collectors, but also scholarly and more considered investors. So there's an upward pressure on prices and value attribution.
How on earth is a layman supposed to know what sort of rare stamps make a good investment?
It takes a real degree of expertise to understand what is an investment grade stamp and what's not. And that's why people come to Stanley Gibbons to pick investment grade stamps, stamps of the right condition, the right rarity, that are most likely to increase in value over time.
If I want to liquidate my stamp investments earlier than I expected, is that going to cost me a lot more?
It does to a certain extent, in that the average investment holding we have is just over 7 years. To really get value out of your stamp portfolio, it takes about 5. However, we appreciate that circumstances change And if you need to exit, we allow investors to do so at a discount to catalogue value.
What I've found is that buying into rare stamps offers investors a way to boost their overall returns and lay off some of the risks of their other holdings. For longer-term investors who are willing to sacrifice some liquidity, I can definitely see why stamps would make a logical addition to the portfolio.